Hey everyone, welcome back to Corporate Decoder, the place where we turn corporate filings into something you actually want to watch. Today we're cracking open Morningstar's latest proxy statement. Is it just a bunch of boardroom blah blah, or does it tell a real story about the company's future? Let's find out if Morningstar is shining bright or just another cloudy day on Wall Street. This proxy statement is basically Morningstar's invitation to its annual shareholders meeting in May. It lays out what's on the agenda, who's running for the board, how much executives are getting paid, and other important stuff that shareholders get to vote on. Let's kick things off with a letter from Morningstar's executive chairman, Joe Mansueto, and CEO, Kunal Kapoor. They're talking about the annual meeting and highlighting strong financial performance in 2024. They mention revenue growth, improvements in operating income, and a dividend increase. They also emphasize robust governance practices and a focus on long-term value creation. Sounds like they want shareholders to think everything's going great and want shareholders to think everything's going great. They are talking about how they are making sure that they have great oversight and accountability, and that they are improving their key policies and procedures, employee training, compliance practices, and our enterprise risk management processes. They discuss compensation for executives is tied to how well the company performs. For example, adjusted revenue and adjusted operating income were strong and exceeded targets, so executives are getting bigger payouts. The document states that they introduce stretch long-term equity opportunities. These equity opportunities will only reward if the performance exceeds rigorous operating income growth targets aimed at accelerating value generation. The letter also talks about making decisions to drop certain products and focus on things that help the company in the long term. One of their strategies was using AI to make client workflows more efficient. Time to dive into the actual proposals. First up is electing the board of directors. There are 10 nominees, a mix of independent directors and members of the executive team. The proxy statement lists each nominee's age, experience, and committee memberships. They want you to vote for all of them. The document says that the nominees have the skills, experience, and background needed to help the board make sure Morningstar is going in the right direction to help shareholders. They also discuss how they decide whether to keep a director on the board. Some of the things they look at are attendance at, active participation in, and preparation for board and committee meetings, independence and any actual or perceived conflicts of interest, and willingness to serve. The company says that when they have directors who are approaching retirement age, they start to look for people that meet their needs and have the correct amount of experiences to support the future of the company. It's a snapshot of each candidate, including things like their age, how long they've been a director, and whether they're considered independent. Joe Mansueto, the founder, has been a director since 1984, while Kunal Kapoor joined in 2017. Here they give you a rundown of what each board member brings to the table. For Joe Mansueto, it's his knowledge of the business and the financial industry. Kunal Kapoor's strength is his experience managing the company's operations. Robin Diamante has vast experience in the retirement industry as a chief investment officer. Now we get to the corporate governance section. This is where they lay out the rules and guidelines the board follows. There's stuff about board size, director independence, and a mandatory retirement age. This section is about Morningstar's promise to protect its brand, which is associated with independence, transparency, and a long-term focus. The company says they have a set of corporate governance guidelines to guide the board in its objective of enhancing shareholder value over the long term. They are talking about how if a director changes their job or stops being employed, they have to offer to resign from the board so that the board can decide if they are still qualified for the job. Morningstar adopted amendments to the Code of Ethics, including the addition of new sections covering the company's policies on charitable donations, economic sanctions compliance and export controls, non-Morningstar business activities, and anti-money laundering. The board must have a substantial majority of independent directors. Joe Mansueto and Kunal Kapoor aren't considered independent because they're part of the management team. The company does performance reviews of the board and its committees. The company sends questionnaires to board members. Then, after they fill them out, the results are talked about in board and committee meetings. After that, the board decides if any changes need to be made. Morningstar engages with its investors by providing written responses to the investors' questions. The answers are available to all shareholders at the same time. The board oversees the company's risks. Key areas of focus in 2024 included brand and reputation, strategic transactions, talent management, artificial intelligence, cybersecurity, information security, and privacy, among other topics. The Audit Committee is responsible for the integrity of Morningstar's financial statements. The Audit Committee is charged with protecting sensitive business information and regularly receives updates related to the company's key events, training, metrics, strategy, and overall security. This committee takes care of making sure the board is working well, the members are qualified, and corporate governance is being upheld. The company tries to make sure that the way the executives are paid doesn't encourage them to take unnecessary risks. For example, executives are paid in both cash and stock to create the appropriate amount of short-term and long-term risk. Executives are also required to hold a certain amount of stock in the company to discourage them from focusing too much on the short term. Directors who are also employees don't get extra pay for being on the board. The other directors get a mix of cash and stock. Each non-employee director gets an annual retainer of $50,000. This table shows who owns the most Morningstar stock. Joe Mangiueto owns 35.7% of the company. Want to get something on the agenda for next year's meeting? Shareholders have to submit proposals well in advance. This section is about asking the shareholders if they agree with how the executives are being paid. Time to talk about the accounting firm. The company wants you to vote to approve KPMG as their independent registered public accounting firm for 2025. This committee monitors Morningstar's financial statements. The Audit Committee hires KPMG to follow public regulations, and the committee expresses opinions on if the company is holding up its end of regulations. Here's a look at what Morningstar paid KPMG for different services. In 2024, the big chunk was for audit fees, about $4.4 million. The document is required to present the differences between their non-GAAP basically adjusted and their actual performance. Now let's give our opinion. Morningstar appears to be navigating a complex market, but like any financial forecast, there are risk factors. On the strength side, Morningstar's brand and established position in the financial information industry give it an advantage. The company also seems to be executing well on strategic initiatives like expanding into private markets and using AI to improve its products. However, there are things to keep an eye on. One risk is that Morningstar faces intense competition. To keep its position in the market, Morningstar will need to keep innovating and giving clients products that are valuable. Overall, Morningstar seems to be on a solid path. The strong brand, experienced leadership, and focus on long-term value creation are all positive signs. It's not a risk-free investment, but it's definitely a company worth watching. Thanks for tuning into Corporate Decoder. If you enjoyed this deep dive, hit that like button, leave a comment, and subscribe for more insights into the world of corporate filings.